All right, today we're going to do chapter 16, the mastery problem. So we'll go into chapter 16 review, and the mastery problem here. Okay. All right. Okay, first part, key sections of financial statements. So we have our income statement sections and our balance sheet sections. Okay, we are dividing things up, right? We have our operating revenue, we have cost of merchandise sold. This is a merchandise business. We have operating expenses and unrelated to normal operations. Okay, balance sheet, we have current assets, plant assets, current liabilities, long-term liabilities, and stockholders' equity. Below, we have each of our accounts, and we're going to indicate whether it's on the income statement, statement of stockholders' equity, balance sheet, or on no statement at all. All right. And then within those categories, where does it fit? Okay, so let's work through that first. Of course, we look at these. We have cash, petty cash, accounts receivable, allowance for uncollectible accounts. Okay, each of these are on the balance sheet, right? And these are current assets. Okay, they are used within the year. Cash, petty cash, accounts receivable, allowance for uncollectible accounts, merchandise inventory, office supplies, store supplies, prepaid insurance, notes receivable, right? Because those are on the short term, they're less than a year. And we have our interest receivable. Okay. Then we have our plant assets. Okay, so those are more long-term assets. We have our office equipment, the depreciation, store equipment, depreciation, and we have our liabilities. We have current liabilities and long-term liabilities. Okay. So for this one, we have accounts payable, sales tax payable, employee tax payable, Social Security, Medicare, health insurance, retirement, unemployment. Okay. Federal income tax payable, and dividends payable, each of those. The next one, we have our long-term liabilities. There's nothing on here for that. Okay, and then we have our stockholders' equity. So, stockholders' equity, we're gonna have our, let's see. Oh, that one's actually going to go here. Capital stock, retained earnings, and dividends. Okay. Then we have our income summary that fits nowhere. Then we have everything that goes on the income statement. Which, by the way, of course, we have our sales. Where is it at? Sales. That's our revenue. Then we have sales discount, sales return, and allowances. Okay, that's all going to go. Actually, that's going to go on cost of merchandise. No, it is not. Sorry. That's going to go under operating revenue because those go along with it, right? Those are going to be subtracted out of the sales that we made. Then we'll get our net sales. Then we have our cost of goods sold category. Okay, cost of goods sold. That's where we have our purchases discounts. Okay, let's see, purchases, returns, and allowances. So we can get our net purchases, and we also need to put this little guy up here, which is our merchandise inventory, right? Okay. We have all of those. Then we have a listing of all of our expenses, operating expenses, right? Advertising, credit card, depreciation, insurance, insurance. Each of these, okay, supplies, uncollectible accounts, utilities expense. All right. Then we have our federal income tax expense. That is going to go for other operations, as well as our interest income. So we'll put that there. All right. And hopefully I didn't miss anything this time. Let's see how we did. Oh, I missed two. Okay. Capital stock and retained earnings. Right here. Stockholders' equity. Okay. It's on the statement of stockholders' equity, and it's also on the balance sheet. Well, duh. Right here. Okay. Capital stock and retained earnings. All right. Next step. Moving on. Okay, we have our adjusted trial balance. All the numbers are entered. We're going to take that information and put that into our income statement. As you know, these first three lines here, that's where we're going to put our heading for our income statement. So let's go ahead and do that. We have our company, Paulson Corporation. Okay, and what kind of statement is this? Well, it's an income statement, right? And income statement is for a certain period. This one is for the year ended December 31st. Oh, yeah. It's very particular, as you guys know. So for year ended December 31st, comma, 20, and then it wants you to put in the dash, but we would put in the year 2022, right? All right, good. Now, income statement. What is this first category? What do we have? We have operating revenue. Okay. Oh, it doesn't like that, so we'll move on. Operating revenue. Okay. The first category under operating revenue is sales. We need to put our number in here. Where do we find sales? Go back up to our adjusted trial balance and look for sales right here. Okay. So we have this 697, 375, 62. Put that in. 697, 375, and 62 cents. Okay, good. Minus or less our sales discount. Okay, what is our sales discount? Let's go back up here. Here it is, sales discount. Will it let me copy it? Ooh, maybe it will. Copy. And paste. Nope, it will not. Oh well, nice try. We have 17, 14, and 12 cents. And then we have sales, returns, and allowances. Put that down below. That is $4,099.24. Okay, and then here we're going to put the total of these two. Right, so we're going to add these together. Let's pull out the calculator here. Calculator. And let's put this here. So we have 1714.12 plus 4099.24. Okay. Whoa. I pressed enter twice. It should be this 5813.36. Okay. 5813.36. There we go. All right. So now we have our sales, and we have our sales discount and our return allowance. Okay, so we're going to take this number and subtract it from our sales so that we can get our net sales. We'll put that here. Net sales. Okay. And our net sales, pull up the calculator here. Make this a little smaller. Okay, net sales. So we have 697, 375, and 62 cents minus 813 and 36 cents is equal to 691, 562 and 26 cents. 691, 562 and 26 cents. All right, good. Not quite sure why that is cut off. Oh, just had to move that over. Okay. Oh, well, we don't need to put anything in there right now, I guess. All right. Next category, we have our operating revenue. Then we have our cost of merchandise sold. Okay. We have our merchandise inventory, and this is what we began with. So we'll put January 1st. It doesn't like that. January 1st, 20 dash. Okay, good. Likes that one. Merchandise inventory, if we look up here, it says that we started off with 112,825.90. So we're going to put that in. Okay, hello. Helps if I put it in right. All right. Then we have our purchases. Okay. So we have the inventory that we had to begin the year, and then we have everything that we purchased. Where are we going to find that amount? If we look up here, there it is. $325,045.31. We're going to plug that one in. Okay. Oh, lost my place here. 325, 0, 45.31. All right, good. So now we have our net sales, we're calculating our cost of goods sold, right? Beginning inventory, everything that we purchased, minus any discount, okay? Our purchases discount, right here, 1959.02, okay? Purchases, returns, and allowances. $2,554.81. Okay, make sure that's right. Good. All right, and what do we put here? Right here, we're going to put this number and this number added together. So let's pull out our calculator. We need to add our purchases discount and our purchases returns and allowance. Okay, so we have 1959.02 plus 2554.81. And that gives us 4513.83. Okay. All right. Perfect. Now, what goes here? We have our net sales, right? We have our cost of merchandise sold. And what have we been calculating here? We're trying to come up with our net purchases. Okay, so let's put that here. Okay, how would we calculate our net purchases? We have our merchandise inventory, what we started with. We have what we purchased. We have the discount and returns and allowances. Okay. So in our net purchases, we're going to take that 325,000 and we're going to subtract that 4,500. Okay, and we'll end up getting the. Let's see what that amount is going to be. So we have this one. I'm going to go ahead and change that to a minus sign, plus our 325,045.31. Okay, that leaves us with net purchases of 320,531.48. Okay. Ta-da! Okay, what now? We have our net purchases. What's this next one? This number, right? We're going to take our merchandise inventory at the beginning and our net purchases, and we're going to add those together to get our total cost of merchandise. Nope, doesn't like that for some reason. Merchandise available for sale. Maybe it wants to get you. Nope. Oh, okay, I see. I'm checking my cheat sheet here, and it wants me to just put in an abbreviation for merchandise. Okay. Total cost of merchandise available for sale. All right. So we're going to add those two numbers. Okay. 112, 825, and 90 cents. What do we get? 433, 357.38. All right. 453, 337, and did I do that right? Yeah. No, sorry. Let's go back here. 433. Yeah, 433, 357, and 38 cents. Okay, good. So now we have our total cost of the merchandise that was available for sale. All right. What is this right here? What do we need to put there? Less, right? So we want to subtract merchandise inventory. December 31st. So this is what we had at the end of the year. Okay, that's what we want to subtract out here. So less merchandise inventory December 31st. And it wants us to put 20 dash dash. Okay, but we all know that is 2022. And so what did we end up with at the end of the year? All right. So let's go up here. Oh. All right. So in order to find this number, remember when I went back to those categories and we talked about merchandise inventory right here. Okay, merchandise inventory. This is on our adjusted trial balance. Okay, so this is what we have at the end of the year in our inventory. So that is the number we're going to put here. Merchandise inventory December 31st. Okay, the 107,177 and 46 cents. So we'll put that here. 107.46. All right, good. Perfect. What is next? Now we have the cost of merchandise sold. Okay, cost of merchandise sold. Whoops. Cost of merchandise sold. All right, how do we get to that number? Okay, so we take our total cost of merchandise available for sale and subtract our merchandise inventory at the end of the year. Okay, pull out my calculator and do some calculating. 433,357.38. Subtract 107,177.46. There we go. All right, 326, 179 and 92 cents. Okay, cost of merchandise sold. Okay, so now we have our net sales up here. Okay, and we have our cost of merchandise sold here. We have that number. Now, why do we need these two? Because we need to calculate our gross profit. Okay, net sales minus cost of goods sold, that's going to give us our gross profit. So let's go ahead and do that. Pull up my calculator and let me move this over a little bit. There we go. Okay, so we're going to do 691, 562.26 minus 326, 179.92. Oh, wait a minute. Something went wrong here. All right. 691, 562, and 26 cents. It helps if we subtract. 326, 179.92. Okay. Gives us 365, 382. Let's see, 26 and 92. You know what? Checking my cheat sheet. That should be 34 right there. So I think I transposed a couple of numbers. All right. So our total here is going to be 365, 382, and 34 cents. Okay. All right. So now we have our gross profit calculated. Our next section of the income statement is going to be our expenses, which I'm going to go ahead and stop this video and see you guys in the next one because it's getting rather long. All right.